Hello, I'm Matt Lampert,
Greetings, I'm Robert Folsom.
and welcome to Pop Trends Price Culture, the video cast about mood and markets. Today we're going to start by talking mood markets and music, and we'll use that as a jumping off point for a discussion about mood markets and manias. Should be some fun. And along the way, we'll also include some comments about NFTs later on in the episode, so stick around for that.
That's right. Matt, what do you say we begin with music? In earlier PTPC episodes, we've talked about how social mood influences the kinds of music that become popular. Today, we can look at music and mood and the market, as in the market for the music of iconic artists and performers.
Yeah, and we've seen something of a buying frenzy among publishing companies and investment funds to snag the rights to top musician songs in the past couple of years. And there seems to be a socioeconomic component to the timing of this trend. I mean, over the same time, notwithstanding some recent turbulence, we've also seen a blistering rally in the stock market with the Dow more than doubling off of its March 2020 low.
Right, and we know that when social mood is bullish, chiefly when the trend is near a positive extreme, we can also see conspicuous manias in investment markets. Investors and traders scrambled to buy up assets, like the craze for tech stocks in the 1990s mania. In recent years, the rush into cryptos, and what can also happen in these manias is things that are not typical investments suddenly become valuable in the eyes of investors and the public.
Yeah, so whether we're talking Beanie Babies in the mania of the 1990s or Dutch tulips in the mania of the 17th century, that speculative fervor can become focused on some unusual, surprising objects. And this time around, one of those objects of speculation seems to be the rights to famous musician songs.
And we've seen a lot of big transactions in the past year. There's too many to list them all, but just a few major of those deals include Stevie Nicks of Fleetwood Mac. This past December, according to the Wall Street Journal, she sold an 80% stake in her songwriting catalog, and the deal was valued at $100 million. A month before that, an investment firm bought the master recordings of Taylor Swift's first 6 albums. Price tag for that was $300 million. Bob Dylan sold his song catalog for nearly $400 million, and that's according to sources close to the deal. Variety reported the official number wasn't disclosed. Bruce Springsteen parted with his songs for a reported $550 million.
Well, Robert, those are some big names and some big numbers.
Yeah, and there's a lot more of these deals. Musicians from every living generation, 60s icons like the Beach Boys, 80s icons like Sting, even contemporary performers like DJ Calvin Harris and others, they've all joined the trend.
Well, they have, and song rights, it's true, have changed hands before in deals that made headlines, like when Michael Jackson bought the rights to the Beatles songs back in 1985. But the deals that you're describing, Robert, these are in a different league in terms of frequency, size, and also the types of players involved. You've given us a sense of the frequency. We're not talking about one or two big deals here, but basically a who's who of top-selling performers from across the music spectrum have gotten involved in this trend. And when it comes to size, the selling prices that you've mentioned, those get your attention for sure. But could you give us a sense of exactly how big these transactions are relative to the kinds of things we've seen before?
Well, you yourself mentioned Michael Jackson's 1985 purchase of the Beatles songs. He paid $47.5 million. And that deal also included 4,000 songs by other artists. If you adjust for inflation, today that's a little bit more than 115 million, 1/5 of what Bruce Springsteen's catalog sold for.
Okay, that's some great perspective. And look, I'm not going to put Bruce Springsteen, the boss, down. Please don't misunderstand. But just in terms of sales, the Beatles sold 4 times as many albums as Springsteen. Yet their songwrites in 1985 sold for about 1/5 the price. And that's on an inflation adjusted basis, and less than 1/10 the price on a nominal basis, with an extra 4,000 songs thrown into the deal. So that gives you some sense of how the magnitude of today's music valuations, how that magnitude has shifted.
Yeah, look, Springsteen is a great artist, but when it comes to consumer music sales, you're absolutely right. There's the Beatles, and then there's everybody else. Um, Another Wall Street Journal article had an interesting way to think about what's happening. In the years just before this most recent buying spree for music rights, songwriters would typically sell their catalogs for like 8 to 13 times annual royalties. Now, however, these catalogs go for 10 to 18 times the annual royalties. So the past few years have seen a 25 to 40% increase in those valuations.
Yeah, it sounds like buyers are willing to pay more, and also there seems to be more buyers willing to buy. You've probably noticed that among the folks making these acquisitions, yes, we have big music publishers taking a swing, but also some investment funds getting involved.
Yeah, and you mentioned earlier that manias include a rush to invest in non-traditional assets. Well, isn't that what's at work as investment firms swoop in to buy music rights? And by the way, one of the biggest investments in music publishing in recent years, it was last year in 2020, the Chinese tech giant Tencent Holdings, they paid more than $6 billion for a 20% stake in Universal Music Group, which is the world's largest music company.
And what blows my mind, Robert, about all this is that it's happening in the music business. You probably saw articles 10, 15 years ago about the music industry. It seemed like it was down and out. They were struggling to make this digital pivot with the plummeting sales of physical albums on CD. And now look at it. This is a market that's become hot again. So congratulations to the sellers in these deals. No matter what business you're in, it's tough to get top dollar for your product. So these are folks who have managed to capitalize on the positive mood trend, these legendary entertainers, and they've managed to ink some big deals for their life's work. Usually when you accuse a rock star of selling out, it's an insult, but even for a rock star, there can be some opportune times to sell out and cash in.
Yeah, I agree. I mean, you just don't hear that phrase nearly as often as you did 10, 20, 40 years ago. But among the buyers of these song catalogs, this is us watching a dollar and cents expression of their optimism. And with the work of musicians whose heyday was, 40 years ago, 50 years ago, I'd say what we're also seeing is a dose of nostalgia. And that's a sentiment, as you know, that socionomists connect to positive mood. And one other thing to keep in mind, from the buyer's side, the scale of these deals means that success hinges on mood remaining positive. And we'll leave it to the analysts here at EWI to forecast markets, but we know, don't we, that trends in social mood don't go in one direction forever.
That is true. And by the way, for the music fans in the audience, the April 2022 issue of The Socionomist features a survey of socioeconomic studies on music, as well as an overview of some exciting new research. So if this is an area where you want to dive in and learn about how social mood shapes music trends, that's a good place to start. All right, yeah. Robert, should we shift gears and talk a little bit about another mania of sorts that we've seen lately?
Does this mean we're getting to the NFTs?
We are, yes.
Yeah, let's do that. It may seem strange to include song rights and NFTs in the same episode, but these trends do overlap because of mood. Like the craze for song rights, the rush to invest in NFTs, it reflects a strong positive mood trend. Both are expressions of mania psychology. Both involve works of art, in the first case music, and the second NFTs, and those are usually visually digital art, right?
Yes, yes, and just to catch everybody up on what an NFT is, it stands for non-fungible token, and it's just a digital asset that lives on a blockchain. But unlike, say, a cryptocurrency, those units are interchangeable with one another. Well, each NFT, on the other hand, is one of a kind. So these days, when people talk about NFTs, what they're usually referring to would be digital works of art, like you said, but conceptually, an NFT could be any kind of unique digital object that's stored on a blockchain.
Right. And in years past, our socioeconomist colleagues have written about how auction prices for physical works of art tend to go higher and higher in positive mood trends. And so I guess you could say, right, that this latest trend is the digital equivalent of that.
Yeah, yeah. In fact, I've read an interview with an art market expert just the other day who was making the point that a number of physical art auctions shut down during the pandemic. And so NFTs helped the art market to remain active. And art auctions ended up having the biggest year ever in 2021, totaling $17.1 billion in sales.
Right. And isn't that a classic example of how social mood will find a way to be expressed? If society, closes or shuts down physical art sales, then other elements of society find new categories, create new categories of virtual art. Investors come in and bid prices up.
Yeah, yeah, that's a great point. And by the way, that $17.1 billion figure, that was from all art auctions across the board. So paintings, photography, NFTs, you name it. The NFT portion of that was only 232 million. And if that sounds low, it's because it is. The figure includes only NFTs that were sold through formal auctions. Most are simply bought or traded on crypto exchanges and other marketplaces.
Yeah, I mean, to put a finer point on it, you get a sense of how big the NFT market is. Or I did in a recent Motley Fool article. They said that in January of this year alone, just one of the big marketplaces saw 4.8 billion in NFT transactions, and that was despite a significant drop in average NFT prices.
Right, yeah, and that trajectory of the price trend is essential. I mean, NFTs roughly seem to be following the price trends in the cryptocurrencies. Those trends peaked in late 2021, typically around November, and then took a hard fall thereafter. The NFT index, which is just one group's attempt to track price trends in that market, shows a similar profile. We've got a peak in November and then a net downtrend after that.
Right, and after that peak, that was a few months ago. Today we're seeing some of the lagging results of that sentiment extreme. Mark Zuckerberg recently said that NFTs are going to come to Instagram, and the goal is to equip users to mint their own NFTs on the platform. In January, Twitter allowed certain members of its subscription service to turn NFTs into their profile pictures. Time Magazine's video arm is developing an animated TV series based on an NFT artist's work. Reese Witherspoon's production company says it's planning to acquire the rights to convert certain NFT collections into film and movie shows. And the list goes on and on. That's just some of the recent activity.
Yeah, and this is where the mood trend becomes so important when we talk about the prospects for a lot of these ventures. We've seen a decline in NFT prices. We've seen a decline in cryptos and even declines in some major stock market indexes in recent months. And you mentioned Tencent Holdings earlier in China. Chinese tech companies have really taken a drubbing in their stock prices. Tencent is no exception. Its stock price is down more than 50% in the past year. So if we continue to see these across the board declines, that's something to keep in mind. On the one hand, if prices were to pop back up, if we got a resurgence in positive mood, that would likely give NFT related projects a better shot of success. But if we do continue to see this downward price trajectory, it's a sign that we could see some rough going in the NFT space. And to circle back to where we started the conversation, we could also see some rough going with respect to the prospects of these major music publishing deals as well.
Yeah, well, I guess that gets us to to the place where I say what we say in most episodes. It depends on social mood, right? Just one final point before we wrap up. As we talk about manias and NFTs and cryptos, it reminds me of the 1990s and how important it was then to separate the long-term promise of the internet, the technology of the internet, separate that from the tech firms whose near-term stock prices only reflected the near-term mania, in that moment. And in the same way now, we're going to be better off separating the long-term promise of blockchain technology. It's an awesome technology, but you want to separate that from the individual cryptocurrencies and NFT assets because their prices likewise reflect the mania. And while many 90s internet companies went bust for sure, the internet itself proved to be a transformative technology that keeps on changing the world. And we'll see if a similar future will unfold for the blockchain.
That is well said. Okay, Robert, let's wrap things up for today. Thank you for watching. If you have some feedback for us, we'd love to hear from you. Please get in touch. The email is institute@socionomics.net. That's institute@socionomics.net. Robert, thank you for this conversation. Let's talk again soon.
Enjoyed it, Matt. Look forward to it.